Facebook and all supporters of the legacy movement of the North Shore Schools Foundation. My name is Carmen, and I have the privilege of serving as the executive director of the North Shore Schools Foundation. We are joined today by Becky Birch, who is the chair of our Legacy and Endowment Committee. And she, under her leadership, our organization has raised I think we're right around 400,000, given the way the market's going. We might be at 400,000 one day. We might be at 300,000 next day, but it's bouncing around, which is great. With our intention of building an endowment fund that will someday fund all of the operations of the foundation. So it's an investment program that we make by putting dollars away and investing them. And someday the nest egg will be large enough that the interest kickoff will be able to fund all the operations, so that one day every donation that anybody gives the foundation will be straight to kids. This is a big dream. The people who do this are like Harvard and the big colleges, but we are little but mighty, and I think we have a really good chance of getting there. So one of our commitments is to kind of increase people's knowledge about investment and financial planning information that can benefit you, but also benefit a charity of your choice. And of course, we are hoping that you might, if you're watching this on North Shore Schools Foundation, you probably care about us, and we appreciate that. So we're hoping to give you some more information. So today I am joined by Barry Glenn from Barry Glenn Insurance and Financial Services. He is a member of our board and a local financial advisor. His kids have grown up in the district. His wife is an alumni, and he has been a supporter of so many charitable things associated with schools and sports and baseball. He is a community pillar, and so we're really grateful to be able to have him here today. We're going to talk a little bit about life insurance and what life insurance is, what your options are, that kind of stuff, and then talk to you a little bit about how that might be there might be a charitable option. So I'm going to give it to Barry, and he can take it away, and then I'll ask you some questions. And if you have questions and you're watching, you can go ahead and comment, and I will grab it off of Facebook. Okay, thank you. And removing mine and leaving it to you, Barry. There we go.
All right. Well, thanks for having me, Carmen. Becky, always nice to see you. So when Carmen asked me to do this, the topic of what is life insurance, I think that's kind of everybody says, or people say they're, well, I've got it at work, or I don't need it, or, well, what is it? And so in its simplest form, life insurance is simply money that is distributed to a person or entity if another person passes away, and that is insured with life insurance. That's as simple as it gets. It comes in two forms. It's called term insurance and permanent insurance. And term insurance is like renting a house. So you have it for a period of time, 10 years, 20 years, 30 years. And at the end of that period, you don't own anything. It's like renting. But also like renting, if you already have gotten a 20-year apartment 20 years ago, the cost today would be dramatically different than in 2002. So if you had a term life insurance today, it's going to be dramatically different when that renews in 20 years. It's going to be dramatically higher. And most people won't want to keep that. So you have a stacking mechanism of trying to continue that life insurance where needed. Conversely, permanent life insurance is permanent. It's for the longevity of one's life. And it is building in the life insurance arena called cash value, similar to owning a house, where you have ownership or equity in that. So the longer you own the policy, the more equity or cash value will be in that process. There is no expiration on that. And in general terms, the premium will stay that level premium for as long as one lives. So that's kind of the basis of what life insurance is. Does everybody need it? Well, from my professional standpoint, everybody does need it. for a variety of reasons, all the way down to a 1-year-old. I do a lot of 1 to 15, 20-year-old people individually, permanent life insurance, not term in that arena. But what you're doing is you're locking in the medical insurability at that point. But let's fast forward into the adult side. The younger you are, the less expensive life insurance is going to be. So way too often people will come in my office and say, hey, I'm 52 years old. Oh, by the way, I just went to the doctor. I'm now on a medicine. I need life insurance. And we talk and they're like, well, that's too expensive. Well, because you're 52 and you're not in the greatest of health. So getting life insurance younger is going to be less expensive for you over the course of time. Why do we have life insurance? Well, we could do that for a variety of reasons. The first and probably the biggest reason why I sell it is people are raising a family. They're getting married, they're raising a family, they've got young kids, and they want to ensure a paycheck, basically. If someone unfortunately doesn't come home, then they're going to have money to keep the family going in the school district that they want, in the home that they want, and such. As you get older in life, you could have life insurance for estate planning. So if you are fortunate enough to have a nice estate, there will be taxation, large taxation on your people who you're leaving that to upon your death. Life insurance could pay for that. And then why we're talking about life insurance is to be able to leave a legacy and a potential opportunity to, in a charitable fashion with, in our case, North Shore Schools Foundation. But that's kind of in a nutshell, just the broad scope of what life insurance is. Question on that? I can get in, and then I'll go into beneficiaries.
I think it's very helpful. And one of the things I wonder about as a single person, like, why would I need life insurance? Why would a single person need life insurance? I'm not sure any other single people are watching, but if they were.
I'm sure there are single people watching. Again, things change. And that's a constant. Things will change over the course of time. I have talked to numerous people and they say they're never remarrying, and then they get married another time. They have a significant other. They have kids. They have stepchildren. There's a whole slew of reasons why. There could be a case where somebody says, I don't have anything. I don't care to leave anything. I would say that it's rare, but there are those. But instinctively, there are opportunities for everybody to have life insurance. And the biggest caveat is the healthier we are, the less expensive it's going to be. And that generally falls under being the younger we are, the less expensive it's going to be as well. The family that we have, I know personally, I've got life insurance on some nieces and nephews because for one reason or another, life had thrown a couple of curveballs in my family. And so this would allow them, should the unexpected happen, that their family would be able to stay afloat. So there's different caveats to there being a necessity of life insurance.
That's very helpful. Tell us about beneficiaries.
So beneficiaries are who is going to gain the money when one passes. Generally, in a marriage, that is the surviving spouse. In a divorce, it could be the ex-spouse because they're insuring against while they're raising the kids. It could be the children of. So if you've got a multitude of kids, you could say, I want my 4 children to split the proceeds. If you have a blended family, you could do it by percentages and say that I have 50% to my parent and the other 50% divvied up to my children. So that's kind of the primary beneficiary is where it will go to upon the first death. If the primary beneficiary has passed prior to the insured, we should have updated the beneficiary, but in not all the cases. Then it would go down to the successor or secondary beneficiaries. And that is where a lot of when we see the multitude of kids or the entity of being, whether that is Cancer Care Alliance, in our case, North Shore Schools Foundation, the Teachers Association, because you're a teacher, Firefighting Association, just a multitude of people, animal rights lovers, just a multitude of those that people say, you know what, while I have built up my estate, I'm going to leave such a state beneficiary to a portion of that to a state or to a charitable contribution. That's beneficiaries in a nutshell.
Do you have any other knowledge, or are you ready for my questions?
Give me some questions.
Okay. One of the things that I didn't know that got me kind of excited about this is I have heard about people who are on a fixed income actually getting a life insurance policy for an organization as a charitable idea. So with the intent that, and so instead of making $1,000 donation, they might decide to get a $50 a month program that goes in perpetuity, and then the recipient would be the foundation. And I guess that was like so shocking. I hadn't really thought about how that would really help. A lot of our supporters are retired teachers or, on a fixed income, and they want to do something, but I hadn't heard. I just don't know how someone does something like that. Is it similar to a key man? Tell me, how does that work?
Well, a key man is generally between two or more individuals in the same company. Key person could be an employee that you want to keep, and so you're putting a benefit in place for that. That's generally a key man. Or in a business entity, if you have two or more business entities, you could be insuring one of each other for a beneficiary. But I think what you're alluding to is if someone doesn't have, they don't want to, they want to donate, but yet they don't have the funds in a pool right now, they could insure themselves or a portion of that and pay. Everything is based on eligibility, right? So whether you're 22 or 62 or 52, you've got to be able to qualify for that life insurance policy. And the younger you're going to be able to do that, the least expensive. So you just use $50. If you use $50 it's going to buy you X amount of insurance on that person who took it out. And that the beneficiary would be the North Shore Schools Foundation, to your example, to say, I don't have the money right now to big, but I do want to be able to give that to them upon my death. That's the way to do that. That's in simplest form. That's the way to do that. Did I answer that question?
Yep.
Okay.
Tell me about how life insurance and a will work together.
That's a great question. And I went back to when we were chatting about the beneficiaries and one's passing. That's something that we've got to be very mindful of, because when we need to update our beneficiaries, because that can get a little bit clunky if you have a will that says these three people are my beneficiaries, and yet your life insurance still has people on there that are different. And that creates questions that's probably going to end up in an attorney's hands to go, hey, how do we get this? So updating your beneficiaries on a regular basis makes a lot of sense. And updating your will, not on every year or 2 or 3 or 4 years, but every so often update your will to understand who is your beneficiaries in there. Ultimately, the company that your life insurance is with is going to have ownership of those beneficiaries. So it can get a little bit clunky if there's a disparity between the will and the life insurance company.
I think Becky just wrote a note that said beneficiaries of a contract of some sort trumps what's written in your will too. Is that correct?
Yeah, of any account, any financial account, beneficiaries trump a will.
Exactly.
Really important to know that.
Yep, exactly. And I get asked questions about a trust. This is really important when it comes to disabled or handicapped children, because if there's not something in place with a trust or a guardianship or something, and that parent passes away, the state gets involved, and it is very clunky. So I urge everybody to have that, see about a trust, a living trust for their children if they're facing that disability or handicap. Very important.
I think that's the one thing I hope that people are learning through our legacy series is if you don't make the decisions for yourself, the people who are left to make the decisions actually don't have you in your best interest. I mean, right. Of course, they have another responsibility, but basically undesignated dollars in any place of your estate, undesignated intent on care, all that becomes a ward of the state, really, and that gets decided, and none of your wishes get to come true. And I think one of the things Becky and I have been talking about wills to this organization for 10 years now, and it astonishes me how many people don't have a will, who haven't put in a beneficiary, who haven't put in like the last line of the organization, which is that's what I'm always saying. I mean, I just in your wills and your financial planning, get it done. And then it's usually like, yeah, leave the proceeds to, my daughter. And then if she's not around, heaven forbid, to whatever. And then it's like, and then if they aren't around, to this charity. And it sounds funny, but it happens so much. It just is one of those things because people don't update it and life happens. And so I'm just out there begging, like, just make us that bottom line.
And here's how fast life goes, right? I mean, we did our first one back in 2004, and we went and saw our attorney friend about 2 years ago, thinking it was like 2012 when we last did it. He goes, no, it was 18 years ago. I'm like, oh my goodness, that's crazy. 5 of the people that were in my will weren't even alive now. That's how old it was. So here I am, the financial guy, and I let my own stuff slide. So put a tickler in your calendar that says, hey, update it every so often.
That's really smart. Becky, do you have any questions? Go ahead.
Question I get a lot is, what is the right number? What's the right number for the life insurance, amount of life insurance? And I will tell people this, having been doing this for 15 years now, I can't remember a time where somebody came to me when I deliver a check that they say, oh, that's too much. We don't need that much. Everybody always says, geez, I wish we would have had more. I wish we would have more. I wish we would have talked more. And I think that's an underlining, it's not getting cheaper to live. And it's just a matter of, not if, but when. And so I urge people to kind of err on that side. If they're toying between 2 numbers, go to the higher side. You can always come down from an affordability standpoint, but you can't go up without having to reinsure. Yeah.
That is great advice. It's kind of like when they teach you to go ahead and spend a little bit more on the house. I mean, except for in 2008, outside of that one little time,
right.
Because you're going to catch up with it. But you can't you do have to have a whole new health, checkup to get a bigger policy. That's fascinating. I didn't know that. Becky, do you have any questions that you want to ask Barry?
I was going to make a comment, and that is, my husband and I have tried to make sure that we have contingent beneficiaries in as well for everything, because we tend to travel together a lot. And God forbid something should happen, we both go. And it's hard to think about, but it's something that you need to do. So we have done that.
Yeah.
And one thing, Bank America has notaries. You have to schedule. You get user services. But we went to Canyon Park and they notarized most everything that we needed done. Some financial organizations require medallion service, and we still have that left to go. But we've done everything else.
Yeah. And my office is fully notarized. We've
got wonderful.
5 notaries in our office.
Great. Yeah. Great. The other thing is, I lost my train of thought. Let me see if it comes back. Becky, that's a great point regarding contingency beneficiaries or secondary beneficiaries, because it is, and a lot of times we'll do one and then we'll add the contingent afterwards as well. The other point I was going to make about about life insurance, is that health is a real factor. You kind of alluded to it. I took out life insurance policies on my kids. Maybe a dozen years ago, and they had to have a physical, and they were young. They were in their late teens, early 20s. Right. Generally speaking, from 0 to 18, 20, if in good health, just with an interview, no medical underwriting. Even up to 30 sometimes, if the values are relatively lower in nature, not a lot of interview beyond an interview, but sometimes when you get into the higher value ones, definitely. My son is a type 1 diabetic, and there you go. He thought it was really crazy that we were doing life insurance, but he didn't understand that when you're healthy is when you want to get your insurance. He has no complications from the type 1, but when he gets to that time, God forbid that he has complications, he can't get the life insurance. And once you have it, he'll pay very, high rates for it. So I think the point you made about timing is really important. Once you have it, you then have more options with that policy. There's a term called guaranteed insurability, and that is really critical at that stage. In today's society, whether it's self-diagnosis or early diagnosis, mental illness is one that is viewed very prominently in life insurance. And so whether that's ADD, ADHD, bipolar, anxiety, depression, things like that, that definitely plays a part. And if our youth have that in their medical records, it's going to play a part in their adult life as well when they go to get life insurance. So the younger we get it, the better and the lower cost. Mm-hmm. Does that also, I think it also impacts long-term care insurance, doesn't it? Your health and age? Long-term care is very underwritten. I'm of the mind that really is a 40 and plus, 45 and plus entity. Just because that's the general populace. The statistics are you're not going to use it until in your 60s. Mm-hmm. But yeah, that is a very highly underwritten category is long-term care. And that is ever changing, as we all know, with the most recent Washington CARES Act that came about. So long-term care is very prevalent. Well, and then but the older you are, the harder it is to get, right? Yep. Because you should start at a younger age for sure. Yes. When you're healthy. Yeah. That's right. Right. Great questions, Becky. Thanks.
I'm trying to unmute. Thank you, Becky. I appreciate it. I was gonna do a PSA. I think one of the things that happened for me, I'm hoping my father's not listening, is he was very into financial planning and had a insurance policy for me as a child, and then tried to transfer it over to me and said keep paying. and they didn't. Right. So all that investment goes away. And I think, at 20, it was like $150 a year. Right. And I was like, I can't afford that. And, I don't, he probably kicked me out of the house for it, but I don't know what happens when, like to Becky's point, like how do we help people know that that's kind of a big deal of, how do you transfer that responsibility over to your children? And
so again, we're kind of getting into the weeds here a little bit, but I set my policies up where the parent is the owner until further said notice. There's a question that says, hey, do you want it to turn over to the kids at age 21? I usually say, or always say no to that and leave it to the owner. Yeah. It's not a set it and forget it. So I will take advantage of the small policies and actually stack more onto it so that instead of having, in your case, Carmen, maybe a $25,000 policy at age 30, and you're like, I don't need this. I'll get that up to $100,000 or $150,000 policy for a low value dollar. And now it's like, okay, now when I turn it over to my kid, it's not 25,000, it's 150,000 in a universal permanent life insurance that nobody can take away from them. And they will also have opportunities to increase that with no medical questions asked.
They choose, yeah.
Yeah.
Yeah. And if I could just add, I told you my son was healthy. My daughter's annual premium's $143. His is $1,130, and he was healthy. So,
because of the diabetes?
Yes.
Yeah.
Yeah. So people really need to think about that when they have children who have issues.
Well, and I'll throw another one at you. It's tobacco. So I will get
true. We don't do tobacco, so
we will get people. We'll get people that the premium itself gets them to stop tobacco, because otherwise they're never going to stop. But it's in some cases 2.5x the premium. So it's like, okay, get the policy in place, then we'll convert it in a year or so when you've stopped, hopefully, and you sign a document that says you've stopped, and we can do a rate reduction at that point. But sometimes that's just the trigger that says, you know what, I don't want to be doing this forever. I want to stop. Yeah. So we kind of help them through that.
So do you structure any annuities for people?
I do not.
Okay.
I do not. No, I do not.
But do some life insurance people do that?
Actually, we have it. We have a product. It's just not as prevalent, but that is another option as far as when we talk about legacy type stuff. An annuity has definite teeth to that, where you can structure that to have that'll give you an opportunity to leave the beneficiary as the legacy.
Might be an option for some people.
I'm sorry, Becky, what?
That might be an option for some people to consider.
Yep.
I think what we're learning is that financial planners aren't just for people who have millions and millions and millions of dollars. It's actually really good resources spent for, our mid-range families, so that you can make sure that everything's taken care of. And so Barry, I have two questions and then we'll close it up. What advice would you give someone who hasn't yet seen a financial planner in their life? Or
I think that we go in progression, right? So I think that if there's a life change or life event, positive or negative, that's an opportunity. Just seeing a professional regarding simple budgeting. My kids are 21 and 19. Simple budgeting, how to do a checkbook. What does interest cost? What is this? I want that car. Well, what does it cost to have interest on that? Or a credit card. Well, having a credit builder credit card at a young age is great. My daughter's credit score is already 760 probably, because she's had a small little credit card for 3 years. So, but then obviously you get into now you're in the work life and your assets hopefully are growing. or you want to buy a house or things like that, that's a definite opportunity to see somebody and say, do I have my ducks in a line? From the insurance side of things, do I have proper coverage so that I'm not getting wiped out if I get into an auto accident and I'm not properly covered? So it's life changes, life events, positive or negative, and just the progression of life from, high school on. That's really what we're targeting anyways in a lot of this stuff. And I don't think it's taught enough. I know that there's curriculum that's being introduced, and I think it's fantastic, but just having a go-to person, a trusted person, doesn't have to be a financial advisor, doesn't have to be a financial planner, just someone that you trust that has knowledge about it.
Because adulting can be hard, and they may find themselves in some real issues that they never anticipated and have to dig themselves out of a hole.
Right. Yep.
So then, thank you, Barry. And that actually I'm going to do a PSA for a second. Barry is a speaker on our new podcast, Skills for Life, which is really cool, which is it's highlighting kind of careers of the future. And there is no shortage of a need for financial planners and people to help you support your life, but you can hear them. I think it's already played. Is that right, Barry?
It hasn't played yet.
It hasn't yet.
And that one's on insurance and financial services. Yeah.
Okay. Yep. So you can learn even more there. It's coming up in a couple weeks then. I think
it is.
A couple more weeks. But definitely want to encourage people to look up that podcast. And then why don't you wrap us up with why you love the North Shore Schools Foundation, Barry? Nothing like putting you on the spot.
Perfect. Why do I love the North Shore Schools Foundation? Well, obviously, you mentioned my wife, Joan. She's an 88 grad. And it was her want to keep our kids in the North Shore Schools school district. So when they were 3 and 4, we moved here, and it has been the best move of our life, right? We raised our kids here, community involvement. She's part of the PTSA for 19 years, and this is her first year out because our son just graduated. So the why is pretty easy. It's a great school district. It's a great community. The people are fantastic. And, the events that we put on, whether it's, auctions or galas or the different functions at Popkini or the backpacks for kids or the food drive during the pandemic, it's just endless of what this community does. And the North Shore Schools Foundation is a huge part of that in being able to serve in the needs that are needed in this community.
Perfect. I'm having a meeting. Okay, I'm going to wrap it up. I want to say thank you so much for your time, Barry. Wonderful. If you have questions, of course, you can reach out to him. Listen to the podcast that's coming. Share this with your friends. It's going to live here. It'll live on our legacy page. It'll live on our YouTube. You'll be able to find this information at your fingertips. I do appreciate you, Becky. Thank you for being here, and thank you for your leadership. And I just want to say, have a great day. Thank you, everybody.